Hi, everyone. Basil Chapman sitting in for Tom O'Brien on the Tom O'Brien Show. My pleasure to be here. Honored to be able to to be a guest host. So let's look at the marketplace, and we're looking at a Dow. Let me just run the numbers. The Dow is down 3 points at 18,352. If you're looking at the charts on Tiger TV, on the left, you'll see a daily chart of the Dow. In the middle, you'll see the weekly chart with the Chapman wave notation. And on the right, you will see the monthly chart. Let me explain what's going on. The Dow was down 3. So it's basically a 0% change day. We've gone down 4 troughs, and yet we've taken 11 sessions to go down 340 points or so. That's nothing. So the jobs number tomorrow will give incentive to the market to do something different, to start a bigger move than this very small move we've had. As we go through these charts, you'll see why. I'm going to explain to you what's so important about certain levels. Certainly on the Dow, a close below 18,200. We close at 18,352. So closing more than 350 points lower, you will start to see a deeper correction take hold. If, in fact, there's just a small little pullback, or, in fact, if there's a breakout and this channel type action that we've seen where there's a steady move to the downside, but nothing out of the ordinary, just a series of slightly higher highs and slightly lower lows, essentially says that this pattern at a certain point just runs out of patience and has a sudden spike to the upside. If that occurs, if the Dow is up 130 points or so tomorrow, if it's starting to get to the high 18,400s, that's going to be very positive action on the short term. So here are the parameters. The Dow up 100 points, let's call it 100 points, up 100 points tomorrow. I would say that's very positive, and we will go into a positive attitude for next week. Doesn't have to be fantastic, but just higher highs and higher lows. If there's a reversal, and then you'll see that the arch formation kicks in, and tomorrow we're down 100 points at the close, that impacts the weekly chart, which is at a peak D, and the monthly chart is still very positive. I just want to explain this real quickly so that I can do the charts with you. If you're looking at the charts, you'll see this is what I show my subscribers to my opening call. That's my daily newsletter, very comprehensive letter, goes out every morning by 8:35. You've got your 6, 7, 8, 9, 10 charts, whatever it is, to explain exactly what we're looking at and our positions that we have. So when a price comes down and forms what I call an identifiable low and starts to move higher, the series of higher highs and higher peaks are labeled very simply peak A. When the price pulls back and it goes 1 penny above peak A, it becomes leg B. When it turns around, it becomes peak B, and so on until you get to D. At D, that is where you can expect other things to happen. It could recycle up. It could break down completely. That's a very important moment. The reason why I wanted to take a moment to explain that is we're at a D already in the Dow, and there hasn't yet been a big deterioration in the technicals. It's still holding extremely well. The missing link out of all these charts is that the New York Stock Exchange didn't get to a D and the Dow didn't get to a D, and we always expect a D before we can get a deeper pullback. Before we can anticipate a deeper pullback. And now look at the S&P. The SPX.X, that's the S&P 500, is at 2164.25, up 46 cents. That's like an unchanged as well. It's like a 0% change. The 0% change goes really well with a price move in the Dow of up 100 or down 100. In the S&P, it would be up 12 points or down 12 points. If that's either one of those tomorrow, will set the stage for next week. But 2147 is key support on the S&P. A break of 2147, not even a close, but a break below is very negative, and a push above says that the 2178.29 high that was made all-time high of peak D, remember the Ds that we were talking about? That'll say save the day, and we can now meander and start to move slightly higher. I'm not expecting a huge up move, but higher rather than lower. And that's how simple the technique is at this particular point. And leg D, a 20.3% gain in the S&P weekly chart from not the August low. In this case, it was the February low of 810. Spectacular move. You can expect that there should be some kind of a consolidation coming up very soon, and I do anticipate it will be very soon. So S&P 500 monthly chart has broken out. It's looking very strong. I will have a webinar later on in August where I'm going to be discussing now that we've gone to all-time highs, what's the prognosis? And my prognosis is we will go, even with sharp pullbacks, we're going to go to higher highs. Look at the IWM. That's the Russell 2000. Russell 2000 pulled back from a peak E top. It was up 10 cents today at 120.55, also holding really well. The technicals in all of these charts are starting to fail in the daily chart, which says that there can be a pop to the upside, but it might be limited. Okay, and we've got a leg D, maybe a peak D by tomorrow's close in the weekly chart, and the monthly chart has improved a lot. QQQ series, the QQQs right now are looking at peak D again at 116.13, up 39 cents at 115.73. A close below 114 says weakness, sell mode in the daily chart of the Qs, and that will pull back quite sharply. But a break above 116.13 says, oh, save the day. We can start to move a little higher next week. This is a cusp. I usually don't talk about going up or down. I usually say we're going up or we're going down. In this case, these are the parameters that I have to watch. Look at the look at gold. Gold right now trading at 1367, up 2.6. It needs to make its leg D above 1374.2 in the continuous contract. And so the parameters for gold is if it does that, then it will tackle the high that was made on the 6th of July at 1385. And if it breaks down, 1344 is going to be key support. If you're looking at the dollar, the DXY, the dollar right now is at 95.75, a nice bounce, but perhaps it's going to struggle unless it can close above 96.50. It might be struggling here for a little bit longer. And if you're looking at crude oil, CL crude oil had a nice bounce today at 41.78, up 95 cents. My subscribers, we went long an ETN. This is a fund that has a mix of many of the commodities: gold, natural gas, crude oil, and some of the commodities. And it's more just a starting position. I want to see, because until crude oil can break and hold above 43.60, if it can do that, and if it can do that by Monday or Tuesday, that'll be a V-shaped recovery and very positive. If it starts to fail, it's going to retest the 39.18 low, and that's not going to be very good. This is a very important period for crude oil. Let's go to bonds. The TLT, the 20-year Lehman Fund, is trading at 139.47. Nice bounce. I just think it's in a range right now. We'll talk a little bit more about that when I get back. Basil Chapman sitting in for Tom O'Brien, and we'll be back. The Dow was down just 3 points. S&P was up 0.46. I'll be right back after these important messages.